What's going on, guys? Stock Picks by Tim here, and Cleanspark's earnings just came out. I just got the earnings for you and cut it up. It is about a half an hour long. I cut it into about 15 minutes or so. Make sure you check out the link down below if you want to watch the full earnings, and also check out the links below for some free crypto stocks and BlockFi's crypto card. I highly recommend it, and it's the only credit card that I currently use. And let's get right into the earnings.
We had our most productive quarter ever in terms of Bitcoin produced, minting 899 new Bitcoin, which is a 36% increase over the previous quarter. And we are on track to exceed our original hash rate expectations. Our average production per day, even as difficulty has increased, has surpassed 10 Bitcoin per day. And with the significant operational progress we are seeing at Norcross, we expect to see those numbers continue to tick upward. While we have mined more Bitcoin than ever before, we mine them at a lower average market price, which has weighed on our revenue generation. This has been a demanding market for high growth, innovative focused companies like ours. Bitcoin miners should operate in a manner that is as sustainable, long lasting, and enduring as the Bitcoin project. In that way, the strengths of the Bitcoin blockchain become our own. One of our defining strengths has been our infrastructure first approach to growth. We now have a line of sight on 600 megawatts of power. We expect this will enable us to power approximately 20 exahash per second. But we are starting with the infrastructure. We source low carbon power and build and source facilities before we acquire miners. Another strength is our capital structure. After the quarter ended, we signed a $35 million financing deal with Trinity Capital. Debt capital is currently one of the lowest cost of capital available to us. And being non-dilutive, it delivers on shareholder expectations while allowing us to finance our growth capital needs. Lastly, I want to take a moment to mention an initiative that has been particularly important to me. Bitcoin mining is a high margin business, and it is imperative that some of those financial wins are realized by employees in terms of ownership opportunities and wage gains. This is why we announced wage increases last quarter for our entry-level mining techs. The increase makes our workforce better paid than the workforces of even the largest technology and commerce companies in the country. We have also started executing equity plans that bring our employees into the family of shareholders. Pride of ownership extends up and down our organization, and because of that, our entire team is uniquely committed to the work at hand. As we mentioned in our last call, we have been considering strategic alternatives for the energy business. We continue to evaluate opportunities while considering the interest of our shareholders, employees, and customers. We intend to focus on maximizing capital and cash flow. Over 90% of our revenues and operating profits now come from mining, while we incurred losses on the energy segment. Currently, all possibilities are still on the table, but we plan to pursue the options that allow us to shore up our capital and cash flows in an expedient manner for the benefit of our shareholders. We believe this approach will allow us to shift the time and capital investment that are currently being routed to the energy segment and instead focus those efforts and capital exclusively on our mining operations. To our long-term shareholders, our vision of an abundant, clean, and affordable energy future remains as clear as the day you first heard it presented. We believe that Bitcoin mining gets us closer to that vision. For our newest shareholders, this may be less relevant, as you were already invested in a sustainable Bitcoin mining company.
While the industry faced some macro headwinds, I believe our company has the strongest financial position in its history. With that, I'm happy to now share our financial performance for the second quarter and 6-month period ended March 31st, 2022. As presented in our Form 10-Q, which will be filed with the SEC today, our total revenues increased exponentially in the second quarter of 2022 versus the same quarter of the prior year. Total revenues for Q2 were $41.6 million compared to $8.1 million, representing an increase of over 4 times. The overwhelming majority of this revenue was driven by our digital currency segment, with revenues totaling almost $37 million. The investments in mining equipment and infrastructure we have made to date have contributed to our growth in these revenues. Our energy segment saw a healthy increase as well, growing to $4.6 million in the second quarter of 2022 from approximately $1.3 million the same period of the prior year. The majority of this growth was due to the acquisition of SolarWatt, which occurred in the second quarter of last year. Total revenues sequentially increased approximately 1% in the second quarter versus the prior first quarter. Revenues from the digital currency mining increased slightly, even as Bitcoin faced pricing pressure. Despite mining more Bitcoins this quarter, the average price of Bitcoin decreased in the second quarter, offsetting the potential for revenue growth. The company did, however, experience revenue growth of approximately $616,000 in its energy segment, representing an increase of almost 16% sequentially between the periods. Looking at gross profit, you will see the increase in revenues between the second quarter this year versus the same quarter last year translated to greater profits, particularly due to the high margins that Bitcoin mining brings. Gross profit in Q2 increased to $29.5 million from $6.6 million in the same period a year ago. When comparing the company's performance to the most recent quarter, gross profit decreased approximately $2.9 million to $29.5 from approximately $32.4 million, representing a 9% decrease. This sequential decrease was primarily driven by the fact we had more miners in service in the second quarter, thus consuming greater energy and incurring additional direct costs. Naturally, as Bitcoin prices increase and decrease, the company's gross margin will also be affected. As you will note, our gross margins contracted between the two sequential periods, decreasing from 79% in the first quarter to 71% in the second quarter, which is directly attributable to the fluctuations in Bitcoin pricing. It is worth noting that while our gross margins have decreased due to the direct influence of Bitcoin pricing, we have seen no incremental cost of revenue that is concerning. The efficiency of our mining operations continues to improve month by month. We have no concerns about material increases to our cost of revenues in the near term. You will see the theme of profitability continued as adjusted EBITDA was $22.5 million for Q2, an increase of more than 10 times over the second quarter from last year, which was approximately $1.9 million. Sequentially, the company saw adjusted EBITDA decrease slightly by approximately $1.8 million from Q1 to Q2. Again, the primary factors which contributed to the decrease in sequential adjusted EBITDA were lower average Bitcoin prices and higher costs of revenue associated with producing a greater number of coins. I'd like to make a few final comments regarding our second quarter operating expenses when compared to the first quarter. Payroll expenses saw an increase of approximately 19% in Q2 compared to Q1, accounting for a $1.7 million difference.
Now, correct me if I'm wrong here, guys, but this next portion here talks about the energy side, and to me it kind of sounds like they're toning it down.
The company made efforts in the second quarter to reduce the cash burn in the energy segment, and most of this difference is related to severance paid for reduction in force in the energy segment employees and prior executives. We do not believe that the trajectory of the indirect costs will continue into future quarters, as our business model does not require proportionate increases in indirect costs or overhead to support greater revenues.
But let me know what you think about that with the whole energy side of things. And let's continue the video and get back into the financials.
We had approximately $1.9 million of cash on hand at March 31st. Additionally, we own 420 Bitcoin with a book value over $17 million, bringing the company's total liquidity to approximately $19 million. The company converted 720 Bitcoin to US dollars during the quarter to pay for growth capex and operational expenses. It was stated on the prior call, we expect to maintain minimal cash amounts on hand. With respect to liquidity, we continue to see Bitcoin as a store of value. We have not purchased any Bitcoin with proceeds from the recently executed Trinity financing. We use those proceeds strictly for growth capital over the next few months, and the majority of the cash we received at closing still remains in our bank account. I feel this is important to note today, particularly given the slide in Bitcoin price over the last several weeks. We have remaining commitments for almost 13,000 additional state-of-the-art Bitminer S19 series machines, which will add 1.3 exahash per second to our total hash rate. On these commitments, we have already funded deposits of almost $67 million, which will be applied to future deliveries. And I want to point out that this $67 million is already paid for using proceeds previously raised through conversion of Bitcoin and issuance of equity in 2021. The remaining cash commitment for the deliveries is approximately $20 million. As Zach discussed in our last earnings call, We expect favorable price pressure on the cost per terahash due to supply chain issues being resolved, additional competition in the space, as well as macroeconomic conditions. While these current commitments will allow us to exceed 4 exahash per second, we're diligently working on securing the necessary number of miners to see through the Lancium agreement. We have been transparent about our capital strategy and expect to apply what we refer to as smart leverage to our balance sheet, while utilizing the other levers of converting Bitcoin and only if necessary, using equity. We believe we have a very strong balance sheet and have prioritized the efficient utilization of our assets. This means we do not expect miners to be sitting idle for long periods, nor do we want to over-leverage our balance sheet with capital that is not put to work.
As I mentioned at the beginning of this call, we have put strategy over ideology, which has placed us in an enviable position to navigate current market volatility. Allow me to reiterate our capital, infrastructure, and ESG strategies. We've adopted a capital strategy that yields operational excellence and is rooted in the realities of our business. Take, for example, our announcement last year that we would start using some of the Bitcoin we mined to finance our growth and operations. Since then, many of our peers have followed suit with one major difference. While we sold when Bitcoin was in the 60s, 50s, and 40,000s, our peers are now being forced to sell when Bitcoin is in the 30s. Some of them have paired that with issuing equity at extremely low relative share prices. We continue to execute a hodling strategy, the imperative word being strategy. We intend to hold Bitcoin and grow our Bitcoin reserves over the coming quarters, but we won't blindly accumulate Bitcoin at the cost of diluting our shareholders and taking on unnecessary debt. Speaking of Lancium, I'd like to take a moment to discuss why we chose them as a partner. Like Lancium, we share the belief that Bitcoin mining is essential for transitioning the U.S. economy away from fossil fuels. Lancium's clean campuses encourage the development of new renewable energy generation while bringing flexibility and stability to the power grid. Through our partnership with them, we expect to have 50 megawatts operational with Lancium by the end of the calendar year, with another 150 megawatts operational in spring of 2023. We then have the option for an additional 300 megawatts that would bring the total capacity with Lancium to 500 megawatts. We expect this additional capacity would be built out in 2023 and ultimately would result in power to support bringing us up to approximately 20 exahash per second. With this power to back our growth in place, we also continue to look for new locations which we intend to own and operate ourselves. There is a strong market argument for using and building renewable energy. And in fact, our peers are now coming to see this as true. Dirty miners are now making efforts to clean up their acts and transition to low carbon energy. Leading Bitcoin's transition to low carbon energy is one reason we partnered with the Sustainable Bitcoin Standard. Their mission is to make Bitcoin the most sustainable asset class in the world by using market-based incentives. Bitcoin is digital gold without the harmful effects on the environment, but only when it is sustainably and responsibly mined. While we believe there is a clear moral directive to mine Bitcoin with low carbon resources, pairing it with these market-based incentives is a clear winner that we are proud to serve. In respect to our other ESG commitments, we are in the process of rolling out our ESG portal on our investor website. The portal is a one-stop source for our disclosures and other information that are relevant to rating agencies and ESG-minded investors. The choice is to be self-governed or be governed. We choose to be self-governed.